Hello students, I hope you're all well and enjoying these videos and learning from these videos. In this video, I'm going to solve a cash flow statement question. The question is in front of you, which is herd limited. The income statement is already given to us. The statement of financial position is provided, and there is some further information given to us. And then at the bottom, the requirement is to prepare a reconciliation of profit from operations to net cash flow from operating activities, starting with profit from operations for Herd Limited for the year ended 30th of April 2008. Prepare a statement of cash flow for the year ended 30th of April 2008. So actually, I have to prepare all three parts of the cash flow statement. And as you know, that the first part is cash flow from operating activities, the second part is cash flow from investing activities, and the third part is cash flow from financing activities. So that's the first step, which is to read the requirement of the question without even reading the question. The second important step is to prepare the format of cash flow statement. So I have already prepared the format. And you can see that it says the cash flow from investing operating activities. Then the starting point is profit from operations. And then I have to add, which is normally in every question, the depreciation and the interest expense. And then I have to subtract any loss which has been recorded on the disposal of asset. If there is any profit recorded on the disposal of the asset, then I will add it back. And then the next thing is to record any increase or decrease in inventory, receivables, and payables. Then I have to subtract the interest paid. Now remember that interest paid can be different from interest expense recorded in the profit and loss account, because sometimes we record interest as an expense, but actually when we pay interest, it's different. So because we are preparing cash flow statement, we have to record what has been paid, the actual cash that has gone out of the business. Then I have to subtract the tax paid. Similarly, tax recorded in the income statement will always be different from the tax we actually pay. Then the next heading is cash flow from investing activities. We normally record payment to acquire any property, plant and equipment, or proceeds from the disposal of property, plant and equipment, and any dividend received. Now, without reading the question, as you will not know what subheadings you need to have, so these subheadings in the format, so I would suggest to leave a blank space so that when you read the question and you come across any subheadings, just add the subheading and record the amount. But these are, if you look at the format of the cash flow, there are 4 subheadings which you can memorize and you can write them down. So these are 3 of them. The next is cash flow from financing activities, and we normally have cash received from taking a loan. So when we take a loan, there is a cash coming into the business. But when we are paying the loan, then there is cash going out of the business, which needs to be recorded under financing activities, because when we take a loan, we are actually financing our business through the loan amount. Similarly, issue of ordinary shares. Companies issue ordinary shares in order to raise cash to finance their business. And the dividend paid. So companies pay dividend to the shareholders and other investors because we have taken their money to finance our business. And then at the end, we will work out the increase or decrease in cash equivalent. And then we will record the cash at the beginning and cash at the end of the year. So let's start the question. So remember, step number 1, read the requirements. Step number 2, draw the format. Step number 3, read the question, pick up the figures from the income statement and statement of financial position and start recording. The first amount I need to pick is 11,071, which is profit from operations. 11,071. Next is, you can see that the finance cost is written right below that, and I'm going to record it straight away. 1,068. And then depreciation. So depreciation is not provided in the income statement, but if I scroll down, I can see note number 1, which is the total depreciation charge for the year is 6,371. Excuse me. 6,371. Now the reason we are subtracting depreciation, my mistake. So we are adding depreciation and we are adding the interest we have already subtracted. So 6,6371. 6371. So we are adding back because these are the expenses which have reduced my profit from operation. So the profit from operation was reduced, so now I'm adding back the interest and the depreciation to push my profit back up. Next is if we have recorded any loss or income from the disposal. So I can see that there is a loss which was recorded. So this loss was subtracted, which reduced my profit. So what I need to do is add back this loss to push the profit up, and this is a notional loss, and I've explained in my previous videos that notional loss is actually loss in the books only. It's not actually a real loss. So we have recorded 840 in our income statement, which is reducing my profit. So let's add back. $840. And then we have some dividend. I can see there is a dividend received, and which is 1120. So dividend received should not be appearing in the income statement when we are preparing the cash flow statement. We should remove it from the cash from operating activities and record it under cash from investing activities. So what I'm going to do is I'm going to erase this and I'm going to record dividend received. And the dividend received, which was added into the profit, which pushed the profit up. Now I'm removing it from the profit to push the profit back down. And the amount is 1120. And while I'm on dividend received, I can scroll down and update my investing activities. Dividend received, and that is 1120. So it should be recorded under investing activities. So the reason we have recorded it under investing activity is because company has made an investment outside and they have received dividend. Next part is, as you can see that the cash flow format is dictating me what to do next. I need to figure out whether there is an increase or decrease in the inventory figure and receivables and the payables. So you can see from last year the inventory amount has gone up. If the inventory amount is increasing, that means a lot of our cash is tied up in the inventory sitting in the warehouse. So the increase in inventory is 759. From cash flow point of view, it's negative balance because cash is going out because we are buying more inventory. Looking at the receivables balance is decreasing from 3967, it has reduced to 3493. which is a good sign from cash point of view. That means the company is collecting cash from its receivables. 474. Looking at the payables figure, which is at the bottom, payable, you can see that the payables balance has gone up, which means the company is not paying its payables. It does not mean that they are defaulting. It may mean that they are getting a good credit from their suppliers, so they are not paying. So if the supplier's balance is going up, which means cash is with the company, which is good from cash point of view, which is 850. We will only record the difference. Now let's update our cash flow statement, especially the operating activities. So there is an increase in inventory, which is 759, and then we have decrease in receivables, which is 474, and then increase in payables, which is 850. Next is the interest paid. So to find out how much exactly interest has been paid, we need to see if there is any opening liability and closing liability of interest. So looking at these figures, I cannot see any opening and closing balance of the interest paid or interest liability. Therefore, it is reasonable to assume that the interest expense which was recorded as an expense is the same amount of interest that has been paid by the business, by Herd Limited. Therefore, I am going to record 1680, the same amount. Surprisingly, in this question, we have the same amount. Sorry, it's 1680, which is the same amount as the interest we have added back. So at this time I can update the interest figure 1680. So the typo error is good that I checked. Next is the taxation. So let's have a look at if there is any opening and closing liability of tax. And I can see that there is an opening liability and closing liability of tax. So the amounts are, so the opening liability is 3208 and the closing liability is 3926. So I'm going to prepare a T account, a ledger, where I'm going to record these transactions and figure out how much tax has actually been paid. And so I need this opening balance figure, the closing balance figure, and the tax recorded as an expense in the income statement. So right in front of it, I'm going to open a T account, call it a tax account. Because it's a liability account, and the opening balance of liability will always appear on the credit side, and the balance is 3208. I'm going to draw the lines here. Okay, it's a bit closer to my format, so I'm going to move it a little bit over there. The closing balance will appear on the debit side, which is 3926. And the expense that has been recorded in the income statement, which is 4021, will appear on this side, 4021. Why is it appearing on this side? Means the amount was transferred from the tax account into the income statement. And to transfer the figure, we have to pass a double entry. Because it's an expense that has been transferred into the income statement, so the income statement will be debit 4021, and the tax account will be credited 4021. So at the end of the month, we remove the figure from the tax account into the income statement. And this is the double entry we normally pass to transfer amount from tax account. Now I will close this account to find out how much has been paid out of the bank account. So credit side is happier, 7229. 7229, take away 3926, and the answer is 3303. So this is the amount which has been paid out of the bank account to pay tax. And if you want to know the double entry, when the money goes out of our bank account, bank is always credit. So if the bank account is credit, what is debit? The tax account. And this is the double entry. So as I'm entering these figures, there is a double entry concept working behind these entries. So I'm going to record 3303 over here. And because this is my working number 1, I'm going to reference it. And I'm going to add all of them. I'm going to add all of them, and notice that where I have bracket, it means it's a negative figure. So the final answer is net cash flow from operating activity is 12,744. $12,744 by adding all of them. That is the net cash flow from operating activities. The next part is to calculate the cash flow from investing activities, and we have to see if we have made any payment to acquire the new property, plant and equipment. So if I just look at the statement of financial position, I can see that the net current assets have actually gone up from 25 to 31. From 25,000 to 31,000. So definitely we have actually bought some assets. Let's have a look at if there is any other information related to the asset. The first one is the depreciation. So this one is important, it's relevant. And then the second is that there has been a disposal of a non-current asset, a property, plant and equipment costing 2,500,000 with the accumulated depreciation of 1 million was sold during the year. Right, let's prepare the T account. So because I'm going to do some workings, so there will be a T account over here. So I'm going to open a T account and I'm going to call it property, plant and equipment. And because it's an asset account, therefore the opening balance will appear on the debit side of the property, plant and equipment account. So I have shown you the figures in the statement of financial position. So the brought down balance will appear on this side, which is 25,150. Draw the lines here. The closing balance of the property, plant and equipment is appearing on the credit side. Now, we have been given some information about disposal. There has been an asset which has been disposed of. And the value of that asset is this asset that has been disposed of is 2.5 million. So you can see that the value of the asset was 2.5 million and the accumulated depreciation related to that asset was 1.2 million. The information 1 is telling us that the depreciation that has been charged during the year is 6.37 million. So this 6.37 million, let's first record this in the property, plant and equipment account. And you know that depreciation reduces the value of our asset. So if our asset is a debit balance, the depreciation should be a credit balance to reduce it. So you can see that the asset opening balance is recorded here. So I'm going to record the depreciation on the credit side, because asset depreciation reduces the value of the asset. And asset is always usually a debit balance, especially property, plant and equipment. So the depreciation related to the property, plant and equipment will be a credit balance. So the depreciation is 6,371. Now remember that this depreciation of 6,371,000 is the total depreciation for the number of years. So it also includes the depreciation that relates to the asset which has today been disposed of. Remember that we do not calculate the depreciation in the year of disposal, but that asset which has been disposed of, which is for 2.5 million, has been in our books for the number of years. And there has been a depreciation related to that asset which has been accumulated and which is sitting in this figure of 6.3 million. Therefore, when we dispose of any asset, we need to remove that asset from the asset account, and any related accumulated depreciation of that asset should also be removed. So first I'm going to remove the asset which has been disposed of, and the value of that asset is 2.5 million, 2500. And to remove the depreciation related to this asset from the accumulated depreciation of 6.3 million, you can see this is the depreciation figure, accumulated depreciation of all the assets. Now to remove the accumulated depreciation of the asset that has been disposed of, which is 1.2 million, I have to record it on the opposite side. Sorry. Disposal. So remember, in accounting, we cannot erase, or we cannot write in the T account, we cannot have a figure with the brackets around it. So if we have to remove or subtract, we always put it on the opposite side. So if I want to subtract 1210 from 6371, I need to record it on the opposite side. There is a double entry working behind it, which I will be explaining in a separate video, which is a disposal video. So if you haven't watched that, please make sure you watch my video on disposals if you have any confusion. And in that video I will show you how to record the disposal and how to remove the value of the disposed asset from the property, plant and equipment and its related depreciation. So please make sure you watch my video on disposals. Now I have got all the figures over here. I'm going to close this account. So the credit side is heavier, which is 40129. I'm going to copy the same figure, 40129, and then I will subtract 25150 and 1210. So the difference is 13769, which is bank, which means 13769 is the amount, which is I guess 13 million, has been paid to buy the property, plant and equipment. And if you want to know the double entry of this, that is property, plant and equipment is debit 13769 and bank is credit 13769. So I have worked out that 13,769 has been paid to buy the property, plant and equipment. I'm going to record it as working number 2, and I'm going to record 13,769. Because I have paid this amount, so there is a cash outflow. So bear in mind, don't forget to record the figure and the brackets. Now the next thing I'm going to do is to find out how much cash we have received when we sold the asset, when we disposed of the asset. So I'm going to do working number 3. I'm going to have a T account, and I'm going to record disposal. Remember, when we record the disposal, we have to pass a double entry, and the double entry is remove the asset from the property, plant and equipment. That's why I credited it. So if I credited it, I need to debit it in another account, which is 2500 disposal account, property, plant and equipment. So now you can see the double entry: disposal account debit, property, plant and equipment account credit. The depreciation, accumulated depreciation related to this disposed of asset is 1210, and I need to record it 1210. Accumulated depreciation on the credit side. And then I have to record any loss or profit we have made on this asset. So let's find out. We have actually made a loss on this disposal, which is £840, 840,000. Now that means the loss has been recorded in the profit and loss account, which is a debit figure in the profit and loss account, which means it will be a credit figure in the disposal account, 840. Loss income statement. So now I can find out how much cash I have actually received from the disposal of this asset. So if I close this account, I can see that the debit side is heavier, 2500, 2500, and over here I'm going to record the difference, which is £450, and that is the bank. So if you want to know the double entry of this, it is actually bank is debit. I'm going to record bank is debit 450, and disposal account is credit by 450, and you can see disposal account is being credited and bank is being debited. I do not have a bank account here. I do not have to open one, but if I'll open one, I will debit the bank account. There is another way to find out the profit or loss on the disposal. So the cost of the asset which has been disposed of is 2,500. The accumulated depreciation related to this asset was 1210. So the carrying value after the depreciation is 1290. And I have made a loss on this, and the loss is 840. That means I have received some cash which is less than 1290, and that's why I have made a loss. So let's find out how much is the loss. So working out the difference between these two is 450, and that is the amount I have received. And now this is another way to find out how much cash we have received. So this is the cash, 450 has been received. So this is the real cash coming into the business. I need to record it in my cash flow statement, 450 in positive, because this is cash coming in. Now let's close this, add all three of them. Remember that this is 13,769 is the negative figure. So by adding all of them, I will get a negative answer, which is the net cash flow from investing activities, and that is 12199. Next, have you taken any loan? Has this company taken any loan? So you can see that the loan figure has gone up, so there's a cash inflow, and the difference is 1010. I can write over here 1010. Ordinary shares. Has this company sold any ordinary shares? Yes, you can see that the ordinary shares balance has gone up, so they have sold. And we always add the ordinary share capital plus the premium, and then subtract it from next year's ordinary share capital and the premium. So the difference is, so what I can do is I can move this down a little. Over here I can write 8500 plus 1450, take away 7200 plus 920, and the difference is 1830. Any dividend paid? Let's have a look. Yes, note number 4 says the dividend paid is 438,000. So I'm going to record 438, and that is dividend paid. So this is cash outflow, so it should be in negative. So let's add all three figures, all three of them. The final answer is 22402. Now this is the reason I had two columns. So now I can see that the second column has got just the final figures, the net cash flows. So the net cash flow from operating activity is 12,744. The net cash flow from investing activity is 12,199 negative, and the net cash flow from investing activity, it should be financing activity. And that is 2402 plus figure. Adding all these three figures together, we will work out increase or decrease in the cash or cash equivalent, which is 2947. 29947. Then I have to look at the statement of financial position and see what was the opening balance of our cash. So going back to the statement of financial position, the opening balance of cash was 8302, which I'm going to record over here, 8302. And by adding the increase or decrease in cash and cash equivalent and opening balance of cash, I have a closing balance of cash and cash equivalent, which is 11249, which is 11 million. So this is the closing balance. So to confirm that our cash flow statement is correct, the closing balance which we have worked out in cash flow should always match with the closing balance in the statement of financial position, which is 11,249, 11,249. So if the final figure is matching, that means everything is correct. So I hope you have learned from this video, and please make sure you like and subscribe my videos so that I can make some more videos. Thank you very much. Bye.